Hi, everyone. Welcome today to our webinar talking about how to capture the revenue that your billing system is missing. Going to give it 1 or 2 seconds really quickly just to make sure that all attendees have joined, and then I'm going to kick us off. Perfect. So, as I mentioned, welcome today. We're going to be talking about how to capture the revenue that your billing system is missing. Quickly, I'm going to introduce myself. My name is Nicholas DeGeese. I'm the Vice President of Client Success here at FlexPay, and I'm here with my colleague, Ray Watson. Ray?
Thanks, Nick. Pleasure to be doing this webinar series with you. My name is Ray Watson. I head up our channel partnerships here at FlexPay.
Awesome. Thanks, Ray. So as a point of order, we will be taking questions throughout the webinar. Feel free to add any questions you have into the questions tab on your browser, and we'll be able to see those come up, and we'll answer them all at the end of the presentation. So what we're going to be talking about today, we're going to be talking about a few things. We're going to be talking about what are failed payments, how these failed payments can actually impact you as a merchant. A little bit, we're going to talk about the complexity of the recovery process and some best practices for how to go about recovering your failed payments. Everything we're going to talk about today is going to be very system agnostic. I know a lot of the attendees on here are going to be on different systems, so we're going to try to keep this as general as possible. And if you do have questions about your specific system or questions about anything that comes up here, as I mentioned, you can ask those at the end. And finally, we'll touch on a brief case study just to give you some examples of what this process can look like in real world for a merchant. So what are failed payments and why are payments failing? So failed payments, as you are aware, are when you attempt to process a credit card and the credit card is ultimately blocked by the downstream processor. In a normal scenario, you take 100 people, you put 100 people into Walmart. Those 100 people, out of those 100 people, you will likely get 1 or 2 people that are going to fail. When you take that exact same cohort of 100 people and you put them into an e-commerce space, which is what most of us here are going to be working with, that actually goes from a 1% rate to a 15% failure rate. And if you take that same cohort again and put them into an e-commerce recurring business. So when I talk about e-commerce, I'm talking about a single sale, an initial point of sign up. When I'm talking about a recurring service, I'm talking about a subscription that a customer may sign up for 1 month, and then you will rebill them automatically month after month. That failure rate jumps up to 24%. And there's a couple of factors here that we're going to talk about today. So why is this dramatic difference in failure rate? What we know is that 2/3 of these failed payments are generally going to be caused by what we would consider a false decline. False decline is something where the underlying payment processor is looking at a transaction and determining that that transaction might be a little too risky for them to allow it to pass through their system. There's a number of reasons that they could flag this as too risky, and we'll talk about those a little bit later. But this is something that's going to put a pressure on your business overall. Another big part of this is insufficient funds. When you take people and you put them into a Walmart, you have the general understanding that the people have the funds available on their credit card when they're going in to buy something. When you're running in a recurring business, you're going to be initiating the charge for these consumers. And because you're initiating these charges at your schedule, you don't know if funds are available. So that's going to have an impact on this. You also have expired cards. Merchants who go into a store consumers who go into a store generally have a good understanding that their card is valid. When you're in an online environment, when you're in a recurring environment, you don't know necessarily that the card that the consumer gave you 6 months ago is still valid today. And then suspected fraud, which we'll talk about a little later. This is really where the underlying banks are looking at a transaction and saying, this doesn't feel like a normal transaction to me. Therefore, I'm going to block this transaction at this point because I'm not sure that the consumer is actually trying to get this done. Ray, is there anything you wanted to add on here?
Yeah, no, I just want to point out just a couple things. I mean, we've always had insufficient funds and expired cards. Those have been going on forever, but there's been a giant leap in suspected fraud, and the main reason for that is, the banks have been absolutely saddled with the liability of this in the past. So what they've done is they've shifted that liability to the merchants, and now anything that even smells like fraud, they're kicking it out. And just to put it in perspective, our study shows that for every one actual fraudulent transaction that an issuing bank declines, they'll decline 7 good ones. So, I mean, that just kind of puts a perspective of that squishy middle of there's a lot here that they're declining that shouldn't be. They're literally throwing the baby out with the bathwater.
Awesome. Thanks, Ray. So we've talked a lot about the suspected fraud and why these things are happening. We'll get into this a little bit here. So why are these payments failing? Why is this happening? So keep in mind, you have thousands of different financial institutions across North America. Every financial institution is going to be looking at payments that they are receiving into their ecosystem individually. Every time a transaction is sent to a financial institution, they're going to score that transaction. They're going to look at that transaction and say, kind of think of it like a credit score. They're going to say, based on all of the details we have around this payment, what do we feel is the risk score of this transaction? If that transaction risk score gets too low, they're going to block that transaction, which is what Ray was just describing. They're the ones who ultimately hold the burden if a transaction is fraudulently passed. So they don't want to hold that. They don't want to be beholden to that money they have to pay out. So they're going to reject transactions because it doesn't fit into their logic. And each of these institutions have different logic for approving and declining these authorization requests. On top of all of this, when a bank ultimately declines a transaction, they will return to you a reason code. And those reason codes are going to be unique to the payment gateway and or the bank that you're using. And they will not always be an accurate representation of why a payment has failed. This is sometimes, and quite often, you'll see what we would consider a bank decline, a very generic code, where they're telling you, I'm failing this payment, and they're not telling you why. And that adds a huge layer of complexity into what you're going to do with these. And finally, and this is something that's been happening more recently, there is the concept of a third-party payment management tool. You've heard of things like Rocket Money. You've heard of other payment management tools. We at FlexPay, or some of us at FlexPay are in Canada. And in Canada, we actually will have our bank notify us that a payment is coming up. And we can actually decline, we can choose to decline that payment before it ever happens. Applications like Rocket Money do the same thing, where they'll actually be able to, as a consumer, you're going to be able to see everything that's coming up. And you can say, oh, I don't remember this. I don't want this anymore. And that will actually get blocked through these applications and through the banks and you as a merchant will never actually know that these things are being blocked. So this is all part of the payment processing and why these payments are failing. Ray, anything you wanted to throw in here?
No, I mean, I would just say, just to reiterate on your earlier point, I mean, it's extremely frustrating to merchants because they're trying to make decisions on the root cause of the failure. And it's not the merchant's fault. It's not because they're doing anything wrong. It's just, as you mentioned, Nick, there's thousands of issuing banks. The reason codes are not the same. And then you funnel those through gateways who have their own categorization. It just creates a lot of chaos in that regard. But so it's not the merchant, there's nothing you can do. It's just, you don't have the data and it's frustrating.
And Ray, you actually, what you just said reminds me of something. This is also nothing that you're doing wrong. This is just the architecture of the payment system. You could have the cleanest data. You could be working through the absolute best practices, and you will still experience some of this friction that exists within the ecosystem. Yeah. We will talk a little bit later of how to get as close as possible to that best practice. But again, I just want to reiterate, this is nothing that anybody is actually doing wrong. This is just friction that exists and that we have to understand how to overcome. So, moving on here, I do want to talk about what does this mean to you as a business. So whenever a payment fails, obviously you're losing the revenue that would be generated from that consumer. in losing that revenue, you're also losing the lifetime value of a consumer. And that lifetime value is directly tied to how much you can pay to acquire a customer. The longer your customers can stick around, the better the customer health you have and the better the customer lifespan you have, the more you can pay to acquire to keep your business profitable and growing uh, and generating positive returns for you. So this has a direct impact on that, the lifetime value, and alternatively the acquisition cost that comes with that. It also causes the customers to end their life cycle prematurely, which has a negative impact on the customers themselves. If you think about it, a consumer wants your product, they've signed up for your product, and them getting notifications, them becoming aware that their payments have failed, or just not having access to the service anymore, really has a negative impact on them, which can then lead to additional negative impacts on your brand because of a feedback cycle that could come into effect. So this is all, one failed payment can have a massive impact for you. Finally, your operational teams are going to need to do something to really try to recapture and regenerate this revenue, or reach out to these consumers. And that has a whole impact of its own that we'll talk about a little bit later as well. Ray, I think you wanted to add something on here as well.
Yeah, I was just going to say, I think it's important to note here that, these are your good customers. I mean, involuntary churn, like you said, Nick, these are customers that not only don't want to cancel, they have no idea that their payment even failed. So these are customers that you can least afford to lose. And when you factor in the loss LTV that we talked about and the acquisition cost to replace a lost customer, it creates a revenue gap that you can't even, it's much larger than just that transaction alone.
Yeah. Thank you, Ray. That's very true. And that is definitely why we want to focus on helping you guys recover this today. So, quick slide here. This is something that we've experienced quite a lot with merchants that we're working with, is just how to measure this, how many of your customers are churning, and how to actually measure your failed payment rate. So there's many ways that people do this. Really, the simplest and easiest way, you don't care about how many times you're trying a transaction. You don't need to focus on, does it take me 5 attempts to get them back? That's all something you can do after and optimize after the fact. You really want to start looking at how many payments existed last month, how many of those customers have voluntarily churned since the last rebill, which gives you your amount you're expecting to bill this month. You take that amount you expect to bill, you remove any successful payments you've had from that, and that leaves you with your failed payments. And importantly, this is your amount you expect to bill in a given day, how many of those specific payments that day have failed, and that gives you your failed payments for the day. You do that over a month, and then you can sum up to your failed payments for the month itself. As I mentioned, you really want to keep this in a cohort where you're looking at a specific group for a specific day or a specific period. Quickly moving on here. So the chaos of recovery. This is a slide that I love to see. This is something that just gives you a good understanding of some of the factors that go into why a payment fails and how you can go about resolving a failed payment and recovering a failed payment. You see all sorts of things on here. You can see your merchant account, the MCC you're related to. Is it insufficient funds? Is it not? Are you using an account updater? Do you have a dunning process? The day of the month that you're processing on, the time of the day. All of these things go into why a payment fails. And we're going to move on from here to talk about how to really go about optimizing this workflow so you can minimize this chaos as much as possible, control it as much as possible within your own business and within your own systems. Ray, anything you wanted to throw in here? Your audio was cut out, Ray.
That's because I muted it, Nick.
Perfect.
I was just going to say that I love this slide because this is perfect chaos. But yes, I don't have anything to add, but I do love this slide.
Perfect. So moving on, a couple of best practices. These are some things that I'm focusing on two columns here, obviously. What you don't want to do and what you can do to really focus improving your recovery process in your day-to-day business. So, to start with, what some things you should not do. You should not apply the same recovery strategy across all response codes. Hard declines are going to be treated differently than soft declines. A hard decline, for context, is a lost or stolen credit card or an expired credit card. A soft decline would be an insufficient funds or a bank decline. So each of those decline codes should have a specific strategy tailored to it. And as we talked about earlier, all gateways will be, or each gateway will give you a different type of code. So you're going to need to really understand a little bit more about how that works, and we can go through that, and we can talk about that with you individually if you would like to. But there is strategies that you would want to apply per response code. You don't want to just say try everybody every day, which actually leads into my next point: is you do not want to retry everybody every day. Failed payment attempts are a finite resource. The more you try, the more you have the likelihood of failing payments in the future, because this will directly apply to that risk score that I talked about earlier. The banks understand who is making an attempt. And if you try every day, they will understand that this might not be the best actor. Therefore, we will give them a lower score to start with, which will make it have more declines happening over time. You do not want to attempt what's called forced capture or forced deposits. This introduces a huge layer of risk to your business, and this is very much something that would flag your account as potentially problematic for the issuing banks, and can get you into some potentially hot water. You don't want to retry hard declines without a valid reason. One of those valid reasons we'll talk about in the do section. And importantly, you don't want to automatically involve your customers in resolving soft declines. When I talk about this, we did a survey, some market research a few years ago, where we worked with the payments group, to understand what kind of an impact a failed payment has on a consumer. And we saw in this research that consumers who were informed of soft decline payments are much more likely to voluntarily churn than they would have been otherwise. And there's a number of factors associated to this. Things like they feel shame over the fact that their payments failed, and they now know you as a business see them as a potential risk for failure. They reevaluate whether or not they want your service. They feel guilt over the fact that their payments failed. All of these negative emotional impacts have a direct effect on your consumers, and that's why you don't want to automatically involve them in the soft decline process. A couple of things on the do side. You do want to implement an account updater process. When I mentioned earlier not retrying hard declines, account updater is an exception. If you get an expired card and you can run it through an account updater service, you can and should retry those expired cards if you get an updated result. You should treat retries as a finite resource and allocate them intelligently. You should be trying the bank declines, the insufficient funds, more than you would be retrying some of those other cards, like the expired cards, or some of the soft decline codes. You may want to retry the insufficient funds more than them. You do want to retry on dates and times that make sense for your consumers. This was something I alluded to earlier. When we're talking about time, if you as a business are processing at 2 o'clock in the morning, which is something that we see regularly, businesses don't want to put a major operational burden on their systems to retry transactions during business hours, so they save their transactions to run between 1 and 4 a.m. When you do that, you're signaling to the bank that this is not the consumer doing that. The consumers are not necessarily buying products from 1 to 4 in the morning. So the banks see a transaction coming in and saying, well, wait a minute, Ray is asleep at 2 o'clock in the morning. Ray is definitely not going to be processing right now. So that actually lowers that score that we're talking about. And you do want to involve your customers to resolve hard declines. Hard declines are things that you cannot resolve otherwise. So you want to reach out to them, and you want to make sure you're reaching out to them with a empathetic and a collaborative approach to help recover those payments. Ray, anything you want to throw in here?
No, I don't think so. I mean, these are just the basics. I mean, obviously there's ways to enhance that, but these are really good best practices.
Yeah. And this, as I mentioned, this is something you can do today. You can implement this in whatever system you're using right now, and will really give you an easy uplift that you can move forward with. So now, from the best practices, you can move into specialized recovery solutions. We have seen that top performing companies that use a specialized recovery solution are able to recover about 23% more of their failed payments. This is, if you put into context of a business, this is a huge amount of additional recovery that you're able to generate, and additional revenue you're able to keep on your books. Some of the enhanced payment recovery solutions. So why you would use an enhanced payment recovery solution. These types of solutions, FlexPay being one of them, have an expertise and knowledge in the complex problems that we're dealing with. We really work on synthesizing everything that we described in the chaos of recovery slide, and leveraging the tool, the AI and the machine learning models we have to make best decisions for you moving forward. They allow for operational efficiency. Because you're not needing to do this internally, you can leverage your internal resources to do other things that are more relevant and more impactful for your business on a day-to-day. And you can leverage the expertise that providers like FlexPay have to help you grow and improve your processes overall. And you can obviously maximize the performance and the LTV of your consumers that you have, making your acquisition costs go farther, allowing you to reinvest more readily, and really help speed up the growth of your business. Ray, anything you want to throw in here?
I just wanted to point out, I mean, you just can't emphasize enough the LTV piece of this. I mean, as you know, in recurring, you're not losing the transaction, you're losing a customer forever, which makes this critically important.
Yep, very true. Moving on here. So the other thing we want to talk about is AI in payments. AI in payments is something that obviously AI is the new thing in the past few years. Everybody is talking about AI everywhere. And this is really where we want to focus on what AI can do for you in your payment processing system. So even outside of failed payments, AI can help you optimize your payment processing. It can help you understand where a transaction is relevant, where a transaction is best suited, and how to go about placing a transaction in the proper location to get the best possible recovery rate. Then you have AI in failed payments. I talked about that a little bit earlier. You take the chaos that we saw a few slides ago and really put some order around that chaos and allow you to best navigate through how to go about recovering a payment. When we talk about the best practices, these are best practices that we at FlexPay leverage, but these were the base, the base of what we built our systems on. We took that logic and we really took it to that next level by leveraging AI to best to determine on a case-by-case, consumer-by-consumer basis how to apply logic to that failed payment. What you can do with the best practices we talked about earlier is you can establish a set of basic rules that you can apply to your business. What we can do differently is what we can actually apply that same conceptual set of rules to a customer-by-customer basis and actually remove the rules. We actually have trained our models to determine how each customer should be treated, and it allows us to be much more granular. And that's where the benefit of AI comes in the failed payment recovery space. Fraud detection is a huge piece. You can leverage, there's some great AI tools out there that can help you earlier in your process understand the potential risk and fraud, the risk of fraud that exists within a consumer that's coming in. And you can actually block transactions as a merchant to say, this is too risky for me to even accept. Helps you manage your acquisition costs, helps you ensure that you have the cleanest book of business possible. And obviously you can leverage it to help in doing all of these other things. You're improving your overall health, which then downstream helps you mitigate any kind of false declines that you would be seeing. Ray, anything I'm missing in here that you can think of?
I don't think so.
Perfect. So moving on, we wanted to talk a little bit about a client of ours that we work with right now. A client of ours, Clinic Sense, we have a case study on our website. You can go take a look at it. They've been working with FlexPay since 2022. They are on the Stripe billing platform. They're a software company. They actually work with physicians' clinics to help them manage their intake, their soap forms, and really optimize the workflow that a physician's office does for their patient intake on a day-to-day basis. When they started with FlexPay, they were seeing about 4% failed payments a month. Not a huge amount, but it is very impactful for their business. They needed a purpose-built failed payment solution that helps them discreetly fix these payments, and they opted to use our invisible recovery process. This is the retrying process without consumer outreach. FlexPay, we have two. We have an invisible recovery and an engaged recovery. Invisible is a solution that allows for retries to happen with no involvement of the consumer whatsoever. And the engaged recovery solution is one that allows us to work with you to outreach to consumers using a behavioral science approach to give them that customized care we talked about earlier, helping them mitigate any of those negative reactions that they would have. In leveraging FlexPay, they were able to achieve a 69% improvement over their baseline, taking their failed payment recovery from 38 to 64%. As you can imagine, this is a huge improvement for their business, almost doubling what they were able to do. And it really helped get them to grow their business faster. Ray, anything you want to add in here? As I mentioned,
I would say though, this isn't an outlier. We have several merchants where we've done an astronomically, significantly higher than their baseline. So yeah, this is one of the good ones for sure.
And as I mentioned, this is available on our website. You can just log in. You'll be able to download this and other case studies on the site directly and see some more information on there as well. So Ray.
Yeah, let me go through next steps. I'm going to leave a little time for questions. I know we're running up on time, but not to sound salesy, obviously we're biased. We work at FlexPay, but certainly we can analyze any merchant's data to determine where they stand, how much we think we might be able to improve their recovery. And if you have any questions, our payment team can walk you through any configuration issues or next steps. Just let us know.
Yeah, that's a great point, Ray. And I do want to clarify. So we work with a number of different systems that exist out there. We work with Stripe. We work with Recurly. We work with Recharge. We work with Zuora. Any system that you're on, my team is directly involved in helping you connect on a day-to-day basis and really can walk through how to go about connecting with FlexPay. So at this point, I'm just going to turn it over to any questions. As I mentioned earlier, if you have had any questions, and I do see 2 questions have come through so far, but if you do have any questions, feel free to drop them into the chat and I'll be able to get those. So first I see here, so I have a question. Richard has asked, so that you're using Stripe for your billing engine, and if you want a payment recovery, if you want to try for, do we have to? Okay, so the question is, do they want, if they are using Stripe, do they need to talk to Stripe to turn on FlexPay if they were looking for that, or is that something that they could do on their own? Richard, if you are interested in working with FlexPay, we're happy to have a conversation with you. We are able to work with your team. So for Stripe specifically, we can provide you step-by-step instructions on how to enable FlexPay within the Stripe ecosystem, or alternatively, my team can actually do that for you. We work with you to set up an appropriate account, and we can go in there and do the configurations for you. That's not a problem. I also see another question here from Jennifer. Jennifer's asking if we choose to use you for payment recovery instead of our billing systems tools, is there any difference in what the customers will experience? So Jennifer, that's a great question. And I should have talked about this earlier. So when you're working with the invisible recovery solution of FlexPay, this is, like it says on the label, this is invisible. Your consumers do not see anything different from what they would normally see. The underlying banks you're working with see nothing different than they would normally see. We are truly an invisible solution that you pass through to process your transactions, which allows for us to communicate with the payment gateway on your behalf using your accounts, using your credentials, so all of the money stays in your ecosystem, and really just optimize the payload as it's happening. In the event of a failure, we're able to tell your system when to try again, and then we continue that cycle throughout the recovery process. For the engaged recovery solution, the messaging may appear a little bit different than what you would normally see, because we are going to work with you on optimizing that messaging and really leveraging the behavioral science approach to those messages. But other than the messaging, the logo, the look, the feel, the colors, the email address that it's coming from, the SMS numbers that it's coming from are all related to your brand directly. So like the invisible recovery process, we don't interject FlexPay in this process in any way. Consumers do not see FlexPay in any way. It always looks like it's coming directly from your brand. I hope that answers your question. That was the two that I had. Just want to give anybody else a few seconds to ask any other questions they might have. If not, we'll happily end here.
Yeah, and just if anybody has additional questions outside of this, they can certainly reach out to anyone. We don't have it on the screen, but my email is just ray@flexpay.io. You can also find our information on our website, so feel free to reach out and connect with us if you have any other questions after this webinar.
Yep. Perfect. Well, I haven't seen any others come through, so we'll give it a few seconds. Otherwise, thank you for coming today, and we look forward to hearing from you at some point in the future.